Good evening, good morning, good night, YouTubers. Mike Martin's here, Mike Martin's channel. And I want to do a quick transmission here. Guys, don't forget tomorrow, trends in the housing market, Wednesday, 6:30, 7 p.m. Western Seaboard time, kind of in there. Make sure you click the bell so you get notifications when I go live. And I kind of want to throw this one out there. It's kind of important because it's an East versus West video again. I keep making these because the two of the most expensive cities in Canada are yo-yoing. What has happened? Let's start off in the West, where Vancouver detached real estate prices dropped 27 large. So prices in Vancouver are dropping again. And I'm going to tell you guys why. It's just plain and simple affordability. They keep blaming supply versus demand. They keep blaming everything. The average person makes, I think, Vancouver couple makes anywhere from 89 to 105,000 average income, dual income, median home price, a medium home income. Sorry, is about that much. You just can't afford it unless they don't eat food and they eat cardboard. Then maybe you could get around it, but I don't think so. So this is dated September 11, 2018. Vancouver real estate is seeing the worst sales in years, and detached homes were no exception. Real Estate Board of Greater Vancouver, REBGV, numbers show detached sales continued to grind lower in August. The decline in detached sales, combined with the rise in inventory, helped to push prices tens of thousands of dollars lower. So guys, this is what I'm talking about. It's a little smidge in the price, and then boom, you're automatically paying a lot less than what the house is worth. And with Vancouver detached real estate prices falling more and more and more, it adds up. So let's see when this cycle worked. When was this cycle? It says here, Vancouver detached real estate falls 27 large. The price of a detached home continues to get cheaper across Greater Vancouver. REBGV reported detached benchmark at $1.561 million in August, dropping a massive 27,400 from the month before. So this is within a 1 month cycle, guys. I thought this was a quarter or a half a year. That's a lot of drop in a month. The decline works out to an annual decrease of 2.8% compared to the same month last year. If you've owned for longer than a year, that isn't all much contrast to a rise. However, I know a whole lot of people that can take $27,000 decline in stride. It hurt me, you know, if I took a 27K loss. Mind you, I do go in my stock sometimes. I don't even want to look at it. It's all red. I'm like, okay, I'm just going to turn off my phone for a week and go back and check. Greater Vancouver detached benchmark price. The price of a typical detached home across the Greater Vancouver Real Estate Board in Canadian dollars. Here it is here. So here's the decline right here. That's where it's been plateauing since it had a bigger dip in tail end of 2017. January 2017. Then you got a little bit of an incline, and then boom, it's tapering back down again. They're trying to resuscitate it, but it's not. The market's trying to resuscitate itself, but it's just not working. Affordability is just not there. Middle class doesn't have the money, plain and simple. The annual decline shows signs of further market deterioration. The 2.8% annual decline in August is worse than 1.1% annual price decline seen the month before. Maybe they started making more land? No. Greater Vancouver detached benchmark percentage change. The 12-month percent change of a typical detached home across the Greater Vancouver Real Estate Board. Here it is in percentage-wise, guys. So they're in the negatives now. So percentages, wow, right now it's at 3.1 points. 12-month change. Yeah, and there's the little decline right there. There was the one up here. The dip right here. There it is right there. You see that dip right there? There it is there. There it is there. You catch it there again. And it's, well, don't worry, but this was during the crash, 2007, 2008, right? So 2009, when things really hit the fan. And then there was a 2013 scare, and then things went back up. This was after the Olympics, and then things went back up, and then the change in percentage-wise is... Remember, it's benchmark price, too. It's right across the board. So those really expensive units that do take a 3% decrease, and they're $20 million units, 3% off $20 million is a lot of cake. So it does bring the whole benchmark across, like right across the board, down. So you get that illusion, but it is a decrease. So Greater Vancouver detached sales are coming in much lower than last year. REBGV reported 567 sales in August, down 11.9% from the month before. On an annual basis, sales are 37.1% lower the same month last year. The monthly decline is seasonal and should be expected. The annual decline is not. That's right. You got slow seasons, you got buy seasons, you got sell seasons, you got a seller's market, a buyer's market, and yearly it's not normal for the whole year. Greater Vancouver detached sales versus new listings. Oh, this is when the poop hits the fan right here. These are listings compared to sales. Wow. So these are people pulling the damn homes off the market because they're not selling. That's what I'm seeing. And the sales are just not matching up. 3-4 years ago, these numbers would be like right on each other, like stink on a pig. But right there, you can see, wow. Greater Vancouver detached listings jump over 11 points. Greater Vancouver saw an increase in new listings. Detached homes, REBGV, reported 1,463 new listings, down 15.1% from the month before. Even with the monthly decline, new listings are still 15.7% higher than the same month last year. The rising inventory pushes total inventory even higher. And don't forget, guys, the cranes everywhere and breaking ground everywhere. And my beautiful Burger King is gone in downtown Vancouver to make way for a condo. So, yeah, it's going to be interesting to see where people start working. Yeah, you got a place to live. Where are you going to work? The total number of detached listings showed significant growth in Greater Vancouver. REBGV reported 6,163 detached units for sale in August, down 4.21% from the month before. The decline wasn't all that impactful, with inventory still 11.5% higher. So it's not supply and demand. It never was. It was an illusion. Higher than last year, higher inventory combined with lower sales isn't great for price preservation. The sales to active listings, SNLR, remained buyer's market territory. The SNLR reached 9.2% in August, over 43% lower than the same month last year, when this indicator remains below 12 points. Prices are expected to fall further. It's not until it rises above 20 points that prices are expected to climb significantly. That means prices are likely to fall until there's a big rise in sales, drop in inventory, or combination of the two. I can see the drop in inventory of people removing them off the market because there's a lot of statistics, sales statistics and screenshots people are sending to me through Zillow and MLS and all that crap, showing basically a house was on the market once for 1.8, then it went back for 1.6, then it went back for 1.5, then it went back for 1.4, and then now they're just leasing out the house for like $3,800 a month because they can't get what they're asking for in the house. So it could be like it keeps getting pulled off the market, right? And that could create a butterfly effect in the results we get, right? Greater Vancouver's detached market isn't looking too hot running into the winter months. And it's always slower sales in the winter, remember, guys? So lower sales volumes are combining with the climbing inventory, placing downward pressure on prices. Until these variables change, downward pressure is expected in the near term, something Vancouver hasn't seen for quite some time. Guys, don't forget to follow Better Dwelling on Facebook and all that other jazz if you guys want to follow them. Really good, insightful, nice page, you know. Oh, wow, look at this. I love how they do this. I love how they do this. Canadians add an average of $187,000 per minute to the household debt balance. Remember, mortgages, I think the amount of mortgage debt there is in Canada is more than Canada's international debt. Anyways, I'm not too sure on that. Hopefully Better Dwelling will read an article on that. Okay, Toronto, now let's head over to the east now. We started in the west. Toronto detached real estate prices shed over $8,900 in value. What's going on? Unaffordability is out of reach for most Torontonians and GTAers. People living in the GTA still can't live there. So why are prices going back up? What's going on? Let's find out. Toronto real estate mixed market extended to detached homes last month. Toronto Real Estate Board TREB numbers show detached prices fell in August. The decline in prices was accompanied by a rise in sales as well as inventory. Toronto detached real estate drops over $8,900. The price of a typical detached fell across Toronto. TREB reported a detached benchmark of $914,000 in August, down $8,900 from the month before. The city of Toronto saw the detached benchmark fall from $1.1 million down to $12,300 lower. Benchmark prices are adjusted to size quality adjustments, which make it preferred the industry. Let me read this again. Oh, they're losing. I thought they gained $8,900, so they lost $8,900 in value. So it's going down, people. Toronto detached benchmark price. So here it is. Yeah, they're sloping here. Sorry, guys, I misread that. I thought it gained $8,900 in value. I'm like, how is that even possible? It's shedding, guys. Detached real estate prices shed $8,900. Sorry, it's late. Okay, I'm gonna give me that. Toronto detached drops over $8,900. The price of a typical detached home fell across down 12. I already read that. So let's keep going. There it is. Here's the graph here. Here's the city of Toronto. This is what TREB is saying. Wow. There's a little good news for detached owners. The annual change actually improved. The TREB benchmark is 1.94% lower than last year, shrinking the annual price change a little. The city of Toronto is 0.04 higher than the same month last year, coming out of last month's negative changes. Okay, neither of those numbers were anything to get excited about, but they are something for a rainbow of unicorns crowd to cling on to. Toronto detached benchmark percent change. Here's a 12-month percent change. Holy smokes, look at this. So people that sold around in and around right here, if you sold right here in April 2017, man, you're grooving. Oh, if people that held on, and there's a lot of stubborn people in Toronto that want to hold on and see if it goes back to where it was so they could sell it at. A lot of people are in negative position right now. I don't know how long they could play the negative position game because there's no negative gearing like Australia has, where you could write off the loss of your property through your taxes that you might owe. But this is nuts. Let's do this. The median sale price of detached home in Greater Toronto showed improvements. TREB reported a median sale price of $836,750 in August, up 2.2% from last year. The City of Toronto median sale price hit $928,000, up 2.54% from last year. Median sale prices aren't adjusted for size or quality, so that they aren't great for telling you how much you'll pay for a home. Instead, it's the best used indicator for dollar flows, which improve. It's just a trend, guys. So here it is. This is Toronto detached average sale price. So the average sale price in the TREB area, and then the 416, and then the 905. So prices are starting to they're softening. The average price of detached home is higher across Greater Toronto. TREB reported the average sale price of $977,187 in August, up 1.2% compared to last year. The City of Toronto saw... sorry, guys. I hope my yawning's not contagious. The City of Toronto saw increases of 1.244275, up 4.9% from last year. So 1.2 million. The average isn't adjusted for size, quality either, so it's also best to use indicators of dollar flow. This is the Toronto detached average sale price change. So, average sale price, and it's just above water, but it's not a buyer's market there yet. Toronto detached home sales spike over 12%. So this is the part I want to get to right here. One of the most interesting numbers in this month's sales, which are much higher than last year, TREB reported 3,001 detached sales in August are up 17.1% compared to the same month last year. The city of Toronto represented 619 of those sales, 12.3% from last year. The catch is last year was one of the worst years for detached sales, so the win is a mild one. However, it's a win. Toronto detached sales versus new listings. So here you go. There's a lot of people pulling off the markets because what they do is they try to sell, right? See how this is going up? Everyone's throwing on the market. Everyone's throwing on the market. Everyone's throwing on the market. And no one's selling. No one's selling. No one's selling. This ain't moving up with it. And guess what happens? You get this people pulling off the market, pulling off the market. Did they sell all these properties? All these properties here? I don't think so. They just pulled them off the market. Toronto detached inventory rises over 9%. This is the key of the article right here. 9 points increase. The number of new listings for detached homes increase across Greater Toronto. Trebe reported 6,167 new listings in August, up 8.24% from last year. The city of Toronto represented 1,071 of these new listings, up 8.29% from last year. The increase bucks and the recent trend of lower numbers of new listings. Even with sales outpacing new listings, total detached inventory still printed large increases. Trebe reported 10,563 active detached listings in August, up 14.62% from last year. The city of Toronto represented 1,735 of these listings, up 9.53% from last year. The suburbs saw higher growth than the city, but neither displayed scarce inventory. So, Toronto detached listings, here it is. So they're trying. You see, in the first quarter of 2018, they tried, and they tried, and now it's declining. Toronto's detached market saw lower prices, higher sales, and higher inventory. If that seems weird, that's because the sales indicator is a little wonky. Last year, Ontario faced policy changes caused by buyers to take a wait-and-see approach. The pause in buying made last year's sales number come in much lower than they would have been. Because remember the stress testing, all that crap they were doing to make sure, and interest rates going up, so a lot of people can't afford the bump or the aggregate movement in the price, so people couldn't afford it. So, especially in Toronto and the GTA, it's phenomenally expensive, and rents are going up there like crazy. I got to get some Toronto people on the phone here on Wednesday's show. That's indicated by a total of inventory rising significantly, even though sales had a massive growth. Massive growth against artificially low month isn't the positive indicator it might otherwise be. Really good written article, once again, from Better Dwelling. So it looks like East versus West is looking at declines. So Toronto detached real estate prices shed $8,900 in value. I'm sorry, guys, I misread that. It is. It's not that late. But anyways, that's, I thought there was an increase in Toronto from what I've been hearing through the grapevine, but it's wonky, according to Better Dwelling. Anyways, guys, don't forget to join me tomorrow in Trends in the Housing Market. I like to have somebody from Better Dwelling on my show. I'm not that big. I'm not a small fry, so it'd be nice to have somebody on the show from this this outfit, Better Dwelling, because these guys are really good, and I like these guys, I'm like a doggy. When the owner shakes his keys and the dog goes nuts? I'm like that when I see a Better Dwelling article. Anyways, let me know what you guys think. Thanks for watching, and don't forget to hit the subscribe button. Vancouver versus Toronto. Let me know what's happening in your neck of the woods.